If you've got an ATO debt and you're thinking about ignoring it, this video might save your house, your business, and possibly your sanity. Because the ATO doesn't mess around, and they've got powers that will make a debt collector jealous. I'm Davie, I'm a chartered accountant, and I run Box Advisory Services. Over the years, I've helped hundreds of business owners navigate ATO debt situations. Some handled it well, others not so much. The thing is, the ATO has some pretty serious powers when it comes to collecting unpaid taxes, but they also have options to help businesses that are genuinely struggling. The key is understanding both sides of that equation and knowing what to do when you find yourself in this situation. Let me be crystal clear about something. The ATO is not your mate. They're not gonna send you a nice letter asking if you're okay. They're a government agency with extraordinary powers that most people don't even know exist. When you owe the ATO money, three things start happening immediately. First, they start charging you interest. It's called general interest charges, or GIC, and it's brutal. We're talking about 11% per year, compounding daily. That means if you owe $50,000, you're getting charged $15 a day in interest every single day. And from the start of July 2025, the ATO has removed the tax deductibility of tax debt interest. In the past, if you owed the ATO money and they charge you interest, you could claim that interest as a tax deduction. So if you're paying 11% interest to the ATO and you were in the 30% tax bracket, your effective interest rate was only about 7.7% after the tax deductions. This changes everything. It means if you got a choice between borrowing from a bank at 8%, which is still tax deductible, or owing the ATO at 11%, which isn't tax deductible, you'll be crazy to choose the ATO debt. If you owe the ATO money as a business, do something about it, or consider getting a bank loan to pay it off. The bank interest is still tax deductible and it can be cheaper than the ATO interest rate, and the bank can't enter your account unlike the ATO. Second, the ATO can hit you with penalties on top of that. Late lodgement penalties, failure to pay penalties, they stack up fast. And third, the ATO can direct the bank, employer, or another party holding money for you to pay it straight to them to reduce your tax debt. That is done through what it's called a garnishee notice. And while you receive a copy, they don't need your permission or court order to act. I had a client who ignored a $75,000 ATO debt for 6 months. By the time we got involved, it had grown to $83,000 just from interest and penalties. And that's when you're still cooperating. Wait till you see what happens when you don't. So let me walk you through what actually happens when you can't pay an ATO debt. I want to be upfront about this stuff because understanding the process helps you make better decisions. First up, garnishee notices. Now, the ATO doesn't just jump straight to this. They'll usually send you a letter first, maybe some phone calls, but if you're not responding, or you've missed the payment plan arrangements, they can issue a garnishee notice. This is where they go directly to your bank or employer or customer and legally require them to freeze and transfer money from your accounts to cover the debt. Your bank has to comply. They'll send you a copy of the notice, but the money is already gone by then. They can also garnishee wages if you're taking a salary from the business. So they'll contact your payroll provider or accountant or redirect part of your salary to them instead. For sole traders, this could mean contacting clients who owe you money and redirecting those payments. The key thing to understand is that garnishee notices usually happen after you've stopped communicating with the ATO. If you're on an active payment plan and sticking to it, they're unlikely to garnishee you. It's more about non-engagement than just owing money. Next, we have director penalties. For unpaid PAYG withholding, GST, and superannuation guarantee charges, the ATO can make directors personally liable. This happens through what's called a director penalty notice, or DPN. The concept is that the directors are responsible for ensuring the company meets their particular obligations because they involve money that's been withheld from employees or collected from customers. When you receive a DPN, you get 21 days to take action, either pay the debt, or put the company into voluntary administration, or set up a payment arrangement. The key is responding within that time frame. There are two types of DPNs. A standard DPN gives you those options I mentioned, but if the company hasn't lodged its activity statements for over 3 months, you might get what's called a lockdown DPN, which makes you immediately liable with limited options. I had a client who received a lockdown DPN for $180,000 in unpaid super. The company was struggling financially, but because activity statements hadn't been lodged on time, his personal liability kicked in immediately. It's a serious consequence, but it's also preventable by staying on top of lodgements and engaging early when problems arise. For business debts over $100,000 that are more than 90 days overdue, the ATO has the option to report the debt to credit agencies. But they don't just do this automatically. There's a process involved. First, they'll send you a notice of intent, giving you a chance to arrange a payment or dispute the debt. If you're actively working with them on a payment plan or you've lodged a dispute, they won't report the debt. If it does get reported, it appears on your business credit file, which can affect your ability to get business loans or trade credit from suppliers. The debt stays on your credit file until it's paid and then for a period after that. The important thing to know is that this is 100% avoidable if you engage with the ATO before the debt gets to this stage, or if you set up a payment arrangement, they won't report it. It's really about non-engagement rather than just owing the money. When other collection methods haven't worked and there's been no engagement from the taxpayer, the ATO can take legal action. For companies, this might mean issuing a statutory demand, which can lead up to winding up proceedings if the company can't pay. For individuals, if the debt exceeds $10,000, bankruptcy proceedings can initiate. This obviously has serious consequences. It affects your credit rating for 7 years. You can't be a company director during bankruptcy, and there can be restrictions on your assets. But here's the thing. These are really last resort measures by the ATO. The ATO generally only takes this path when there's been prolonged non-engagement or when other collection methods haven't worked. Most businesses that communicate proactively and work with the ATO don't end up in this situation. I've worked with clients who've successfully resolved six-figure ATO debts through proper engagement and structured payment plans. The key difference is usually whether they picked up the phone early or tried to avoid the problem completely. Alright, now that I've scared the living shit out of you, let me tell you what you should actually do if you can't pay the ATO debt. Step 1. Call them immediately. The moment you know you can't pay, pick up the phone and call the ATO. Don't wait, don't hope it'll go away, don't think you'll figure it out next month, call them. The ATO has a dedicated team for people in financial difficulty. They're actually pretty reasonable if you engage with them early. But if you ignore them, that's when they bring out the big guns. The most common solution is payment plans. You can arrange to pay your debt off in installments. Yes, you still get charged interest, but at least you're not getting garnished or bankrupt. If you're genuinely in serious financial hardship, and I mean you can't afford food, housing, or medical treatment, you can apply for a release from your tax debt. This is rare, and it's only for individuals, not companies. But if you prove that paying the debt would leave you unable to afford basic necessities, the ATO might wipe some of it or all of it off. For larger debts, sometimes you can negotiate a compromise. This might mean the ATO accepts a lesser amount if you can pay it as a lump sum, or they waive some penalties and interest. This usually happens when they think it's the best chance of getting something back. Like if your company's about to go under, they might accept 70 cents in a dollar rather than getting nothing in liquidation. This is called the small business restructure. If you've got a significant ATO debt, get professional help. A good accountant or a tax agent who deals with ATO debt resolutions can often negotiate better terms than you can yourself. We know how the system works. We know what arguments work with the ATO, and we can often get payment plans or compromises that you wouldn't get on your own. Look, owing money to the ATO is scary, but it doesn't have to destroy your business or your life. The ATO actually wants to work with you. They'll rather get paid over time than bankrupt you and get nothing. But you've got to engage with them. You've got to be proactive. Don't wait for them to garnish your account or send you a director penalty notice. And remember, that 2025 rule change, the ATO interest is no longer tax deductible. So if you're carrying ATO debt, it's costing you more than ever before. Get a business loan to pay it off, set up a payment plan, or get professional help to negotiate a settlement. The worst thing you can do is do nothing. The ATO has more power than any other creditor in Australia right now, and they're not afraid to use it. But they're also reasonable if you work with them. Don't let an ATO debt destroy everything you've built over the years. Pick up the phone, engage with the process, and deal with it properly. Or speak to us. I'll see you guys later.